Hi everyone, it's Anne with Royal LePage Magna, talking today about the Bank of Canada's latest interest rate decision and what it means if you're thinking about buying or refinancing a home. On September 17, 2025, the Bank of Canada lowered its policy interest rate by 25 basis points, bringing the overnight rate down to 2.5%. This is a significant move, especially if you're thinking about buying or refinancing a home. The bank pointed to a slowing Canadian economy, including a 1.6% drop in GDP in Q2 and a softening labor market. Employment has weakened, especially in trade-sensitive sectors, and the unemployment rate moved up to 7.1% in August. Inflation is moderating, with consumer price growth (CPI) at 1.9% and core inflation measures showing signs of easing. Trade disruptions and tariffs continue to weigh on business investment and exports, creating uncertainty. What it means for mortgages, home buyers. Borrowing is a bit cheaper. A lower overnight rate typically encourages lenders to offer more attractive mortgage rates, which could make buying or refinancing more affordable. But it doesn't mean mortgage rates automatically drop. Banks and lenders set their own rates, and they consider many factors beyond the Bank of Canada's overnight rate. Timing is still super important. If you've just started a new job, switched up your income, or you're early in your career, lenders usually want to see a few months of steady pay before they'll say yes to your mortgage, no matter what's happening with interest rates. So hang in there and keep building that stability. Watch for further rate decisions. The bank flagged that it's proceeding carefully and that future rate cuts may depend on how trade, inflation, and employment evolve. If you're locked in with a mortgage now, this could improve your odds of refinancing later or getting a more favorable rate. If you're planning to buy soon, make sure your income, credit, and down payment are stable. The timing of rate cuts is only one piece of the mortgage qualification puzzle. Keep an eye on how mortgage lenders react, not just interest rate announcements, but how they apply the changes to real mortgage products. Talk with a mortgage broker or lender to understand how these shifts affect your individual mortgage strategy, especially if you're changing jobs or income. If you're thinking about buying or refinancing and want help understanding how rate changes affect your mortgage or purchasing power, I'd be happy to walk through it with you. Feel free to reach out. I'll keep watching rate moves, and we'll make sure you're well positioned when the time is right. Thanks for watching. I'm Anne. If you found this video insightful, don't forget to like, share, and subscribe for more stories that matter.